and welcome to the Gold, Ghosts, and Guns podcast for August 6th, 2026. My name is Tom Luongo. We have a lot to talk about. It's episode 255, and I get the great pleasure of finally getting a chance to have a nice long chat with Larry Lepard, who I've been a fan of for a long, long time. And Larry and I've had, lovely chats on Twitter. It's actually, interestingly enough, for me, one of the rare times that I can have mild disagreements with people on Twitter that are constructive. And it was great. And so I saw that and I'm like, well, I think I'm going to break my rule of meeting new people in a when I normally like to meet people that I don't know in a moderated environment, just in case we have any problems. I broke my rule. I'm like, I think Larry and I can have a nice chat. So Larry, good morning. And thank you for taking the time to come
Good
out.
morning, Tom, and really nice to be with you. It's likewise a lot of mutual respect. I've been reading your stuff for years and agree with a lot of what you have to say. Kind of a little different on some of it, but that's
Sure.
natural that smart guys would have different takes on the same situation. So
Agreed. As a matter of fact, one of the things that is really important is something that my partner Dexter White and I talked about last week on the podcast, which is that it's healthy to have disagreements, right?
Right.
I don't want to. We're not going to do this as the framing for the podcast, but it's just in general. We live in a world right now where we're not allowed to disagree like men and then still have a drink afterwards and go, yeah, oh yeah, well, okay, nice.
Well, and as we talked about, it's all probability weighted. I mean, we don't, nothing's
Right.
100% certain. We're just kind of guessing as to what the probabilities are of a certain view being correct, right?
Yeah, exactly. So, given that. Given that, what do you think the probabilities are that we've reached some kind of equilibrium state, bottom? Because you and I are both gold, silver, and Bitcoin guys. So
Yeah.
we were chatting about this before the podcast started, and I think we're in a bottoming pattern, or potentially even a breakout pattern here. Where do you think we are, and how do you think we're going to go from here?
Yeah, I'm right there with you. So let's just kind of review the bidding and how do we get, just to bring people up to speed of how we got here. Let's start in early 2025. The notion was that Doge was going to come in and solve all the monetary problems. They were going to balance the budget. They were going to cut 2 trillion. Then they were going to cut 1 trillion. Then, oh my God, this thing is so screwed up and broken that even a smart guy like Elon says, fuck it, I can't do anything. I'm out of here. Right. And he quits, and so does, Vivek and so on. And so Doge kind of failed. Right. And I think when Doge was still a possibility of working, the markets and the world were saying, hey, this is great. Trump's in here now. They're going to balance the budget. They're going to clean out this, broken swamp, blah, blah, blah. And, who needs gold or who needs Bitcoin? Who needs monetary debasement insurance, which is what I'm going to really call the trade that I think both you and I agree on. Okay. So that was where we started 2025. Well, Doge failed. I think the failure timeline was somewhere kind of March, April, Mayish, sort of, so to speak. And when it failed, gold caught a bid, a pretty serious bid. And, it went up 65% last year. And that's very rare. If you look at, 100 years of trading history of gold, it's only done that a couple of times, like in 79 and 80 and so forth. So that was signal, that was like, holy shit, something's going on here. The gold world's, and what drove it? A lot of things drove it, mainly sovereign buying, but also just, generally people realizing that, this government is broken. They can't solve this deficit issue. They're going to keep running big deficits forever. And in light of all of that, we got to have some monetary debasement protection. And on a relative basis, compared to the money supply outstanding, gold is pretty cheap. So that happened last year with gold. And then silver kind of followed suit. And it's the wild, stepchild of gold. And of course, silver went up from 30 in the early part of the year to 120 in February, late January of this year. So that's 4x. I mean, that's incredibly rare. In fact, I'm not sure that's ever happened. And so these were signal, right? These markets told you something's different, something big is going on here. So to me, that was the first leg of quote unquote the monetary debasement trade. Now it's interesting. Bitcoin did well up into October and then it fell off before gold and silver. And to me, Bitcoin's a little bit of a liquidity fire alarm. It kind of tells you how much money is in the system and if there's enough. And the fact that Bitcoin backed off kind of told me that maybe there's not enough money in the system.
Mm-hmm.
But then they all corrected because they got ahead of themselves. And we also got a new Fed chairman. And the narrative, the Wall Street narrative, the Washington narrative, et cetera, was that Kevin Warsh, who had been a Fed governor once before and criticized QE post his governorship, was and wrote an article, an editorial in the Wall Street Journal, said, "Hey, I believe we should shrink the balance sheet." And so suddenly he got labeled a hawk. He's a monetary hawk.
Mhm.
And as you know, if we've got a monetary hawk coming in and they're going to get everything under control and control inflation, we don't need this debasement trade anymore. It's over, right? And so that's to me what happened there. And so gold came off 5,400 to down to 4,000-ish, a little maybe a tad below, and silver came from 120 down to 58. Pretty big correction. And Bitcoin has just kind of continued to stumble over its feet, going from 124 down to 58. I think is a low. It's in the 60s now.
Mhm.
And so these things occurred in light of Warsh's saying or thinking, people thinking Warsh is going to be a hawk. And going along with that narrative, the world got to believing that, he's not only a hawk, but he's going to raise interest rates. And you can see this in the futures market. You can see it in the federal, in the CME market. You see it a lot of places. There are 80-90% chance he's going to raise interest rates. In fact, Citadel, just wiped out this AI speculator by saying that he was going to raise rates at this meeting, which caused a
Right.
massive sell-off in a few things, and bingo, they buy all of Leopold's assets for pennies on the dollar. I
Mhm.
thought that was hilarious and typical of the kind of bullshit that these Wall Street guys can play. And Citadel is one of the top criminals on Wall Street. So anyway, that all occurred, and so, we until very recently, like as in a couple of days ago, we're talking now on the 5th or the 6th, and on the 5th, yesterday, gold was up over 100 and some odd dollars. It's been up almost $200 in a couple of days. Gold broke out. I mean, it explosively broke out. And I think that was triggered by the further unwind of the Japanese yen carry trade. And what does that mean? You covered this a lot in your prior podcast, but as we all know, Japan has borrowed a ton of money and gotten themselves very leveraged, in terms of debt to GDP. They held their interest rates extremely low, and so people would borrow in their currency, swap it into another currency, and this was the Eurodollar people and the European people, as you pointed out, and get a carry because they could borrow cheap and earn something higher than what they're borrowing at. And as long as the yen didn't fall, they were fine. But of course, all good things come to an end, and the yen has been falling quite a bit. And furthermore, in order to defend the yen and defend, their currency or their system, Japan's interest rates have had to go up. They've had to let them go up, and they've had to increase them, as you pointed out multiple times in your podcast. So all of it got to a boiling point, I think, where, they realized, hey, no mas, we can't let this go any further. And now Besant had to step in. So now the adult shows up and says, hang on a second. Japan's got $1.2 trillion of our treasuries. Our treasuries in the last 4 months have gone from 4.2 on the 10-year to 4.7. That's not the right trend. And if it gets to 5, we all kind of know that that's the red line. And if Japan starts selling our treasuries, that's not a good thing. So, hey, Japan, we got a deal for you. So you don't have to sell your treasuries. You can just pledge them to us as collateral, and we'll give you a swap line and provide you with the cash you need, and use that to buy the yen, defend your currency. And I think it was a couple of day delay between when that got announced and, of course, the famous picture that, he let Reuters take of, buy 5 billion Japanese yen. I mean, all this bullshit,
hilarious.
right? I mean, it's almost comical, right? But gold woke up and said, oh, I get it. And this is going to be, I mean, this is kind of backdoor printing. I mean, it's not technically printing, but it kind of is because, where does the swap line get issued from? It gets issued out of the Treasury, and the TGA, I think, gets dinged for it. So, or maybe, no, I'm sorry, I'm wrong about that. It gets that shit out of the Fed. It gets
Issued out of the Federal Reserve Bank in New York.
Oh, the Federal Reserve. Yeah, my mistake.
No worries.
I'm not as good at the monetary plumbing as some people, but interestingly enough, even furthermore, and it was in the Wall Street Journal the other day, and I tweeted about it, that Besant said that the size of the lines that the Fed was allowed to give are 60 billion, which is a big number, by the way. That's not a joke, right? He said that might need to be bigger. And I'm kind of like, well, that's interesting. And so he's done a little bit of his best Mario Draghi imitation. We all remember Mario Draghi defending the euro back in 2013, where he said, don't worry, we will do whatever it takes, and it will be big enough, and we will do whatever it takes. Right. And so that's, and I think the market read that and said, oh, I get it. The Fed's going to have to print. And so what I've maintained for a long time, Tom, and then I'll let you kind of question me, but the central thesis of my book and my, appearances on pods and my stuff on Twitter is that mathematically these guys are trapped.
Hmm.
They're mathematically trapped. And, all the rest is theater. They can say what they want, they can do what they want. I mean, this morning the FT had somebody saying, some sources tell us that maybe worse will increase. Well, whatever happened, either the FT made that up, which is a real possibility, okay? But it's also a possibility that some source at the Fed did tell them to leak that because they wanted to calm down the US bond market. Who knows? We don't, what are the probabilities? We don't know. But the point is, these guys can say and do a lot of stuff, but at the end of the day, they can't change the mathematical construct. And the mathematical construct is that with the debt growing at the rate it's growing, with the interest expenses growing at the rate they're growing, if they do not grow M2 in the money supply at a comparable or greater rate, they will run into a financial crisis. They will some bonds will start to fail, interest rates will blow out, and people will say, "Hey, you're not going to make the debt payments, and therefore we're selling these things." And that's just math. It's just
Hmm.
pure math. And this has happened twice before. It happened in 2008. It happened in 2020 when the Treasury market went no bid on COVID. And I would submit that it's going to happen again. Wrote a book about the topic called The Big Print. So those prints were big. One was 3 trillion over 3 years. The other was 5 trillion in 18 months. I think the next one's going to take us to, we're a Fed balance sheet now of 6.7 trillion. I think we're headed to 15 to 20. Now, could I be wrong about that? Sure. Could I be wrong about the timing? Sure. I've said, I rushed to get the book out thinking to myself, God, I got to get this out before it happens. Because if I'm late, I don't want to publish the book after the big print has happened. So I was like in this incredible rush to get it
Right,
out in
right, right.
early 2025. Well, turns out, and I thought, oh, it's going to happen in 6 months. And I kind of feel like it's imminent now. But to be honest with you, I felt like currency failure was imminent in 2008. So don't listen to me. I'm always no, really, I'm way too early. And
Yeah.
I tend to get caught up in the drama and think, oh, it's happening right now. I'm like that guy. Remember in Margin Call, remember where Jeremy Irons is sitting and saying, I'm telling you, this is it. This is it right here. That's me. I mean,
Yeah.
and
Well,
so,
it's funny, Larry. I don't know if you remember. I'm sure you read Jim Sinclair's blog all those years ago on
oh
JS
yeah,
Mindset.
gosh,
Yeah,
yeah,
I
he was
remember him
fabulous.
coming during. This is it. He
Yeah,
said the exact thing, right?
yeah, yeah.
And I remember listening, but he was right because what it did, it actually killed. It was the end of what amount. It was the beginning of the end of what I like to now call the LIBOR standard. It's that
Right.
era between
Yes,
1971 and 2008. And
yes.
then it's similar to like I remember reading Murray Rothbard years ago. I'm not as
Yep.
much of a doctrinaire Austrian as I used to be, but I remember reading, I think it was What Has the Government Done to Our Money? And he was just had what and there's a lovely period where he was explaining the breakdown of Bretton Woods. And he's like, and then the London gold pool fell, and then they tried this, and then they tried this, and then they tried this. In
Yes.
1971, they finally just severed
Yep.
the like the gold.
Yep.
So there was that 3 year period where we had like three little mini monetary systems that failed, and then we finally had to move to the next one. And so the LIBOR standard was what started to be um, birthed in the early
Right.
70s. That ended in 2008. We did a whole bunch of stuff between 2008 and 2011 until everybody said, "Nope, it's the coordinated central bank policy that was the top of the gold bull market." We got the $500 billion G7 central bank swap
Yep.
lines were
Yep.
announced. Brexit was now all of a sudden off the table. And I'm
Yep.
like, oh, and that was the
It
end of
all
that.
fits,
And then
as you say, it all fits together. Euro
right.
dollar keeps growing. Yeah.
Okay, so now then we have 11 years of the coordinated central bank policy with round robin QE. It's the
Yeah.
Bank of Japan's turn. It's the SMB's turn. It's the Fed's turn. It's the
Right.
ECB's turn. It's the
Right.
BOE's turn. And we just keep doing this
Yep.
until,
It's China's turn. Yeah. Yeah. I
right,
mean,
it's
yeah.
China's turn. Exactly. And then we did SOFR.
Right.
And then the LIBOR standard. And then, so we had 11 years of another interregnum. And
Yep.
then SOFR changes the game. And
Yep.
since then, that's what's challenged all of my previous precepts about all of this. So when I'm listening, so I was listening to you very carefully, and I look at I see exactly what you're talking about, the question that keeps going through my head the entire time is who's at the end of the collateral chain of that print, that big print that has to happen. And in
Yeah.
my mind, it's not the Fed and it's not the Bank of Japan, it's the ECB and the BOE
I think you're probably
because
right.
they're the ones with the weakest macroeconomic fundamentals. They are the one without a unified
That's a good
bond market
point.
in Europe. And then the BOE has no collateral because they
Yeah,
sold
that's
all
a
their
good
gold.
point. That's a good
So
point. I mean, it could be Japan, but you're right. Japan has a much better industrial base. Yeah.
exactly. And the United States has literally come out and said, "You're our boys. We love
Yeah,
you.
yeah,
We love
we're
Japan."
gonna protect you. Yeah, no, that's a great point. It's really I hadn't thought it through. Yeah, so I agree with you. So, I mean, and I just heard you say the words. What's at the end of that collateral chain? I'll tell you what's at the end of that collateral chain. Gold.
Exactly. I
Right.
know.
I mean, end of the day, that's what's going to be at the end, right?
Right. And so this is why, like, it's funny. What I've been doing for a long time has been rethinking through, like, why have the gold bugs been wrong so many times in the past? Why is this not happening? They're wrong for a long time, and then they're right, and then they're wrong for a long time, and they're
Yes.
right. And the question I've had is the following, which is, what if we've all been right for the wrong reasons? Like, I'm an old chemist, right?
Right.
And in this respect, there's when we were trying to figure out the model for the atom back in the late 19th century, early 20th century, we had the plum pudding model of the atom, and then we had the de Broglie model of the atom, where we had discrete energy levels and electrons sat at discrete energy levels. As opposed to a continuum of energy, we had discrete quanta of energy, which is how we get, and which makes the periodic table make sense. So and the interesting part about it was that I think it was Niels Bohr got the right answer for the energy level for hydrogen, but then but that model was wrong because it was only good for hydrogen. Because with
Interesting. Huh?
in a one electron system, you could use Newtonian math to
To get there.
predict
Yeah.
to get that answer. The minute you get into a Hamiltonian Schrodinger equation multi particle system, the math falls apart, and you couldn't
Interesting.
solve for helium. And so that's
Interesting.
what led to where we are today and the kind of understanding that we have today. So in many ways, that's part of what I've been doing is trying, like, maybe the big print is that we're just going to allow the collateral to rise in price while we try
That's
to
right.
hold the general price level the same and not expand the balance sheet. This is the trick: not expand the Fed's balance sheet, repurpose the Fed into a different thing, become a more treasury oriented monetary system, and then allow the collateral to rise in price to balance the books.
And I'm all for that. And honestly, that would be the most honest and best way to solve this entire conundrum would to not have be to, I mean, what you're describing, I think, and you can correct me if I've mischaracterized it. I think what you're describing is a monetary reset where we let the correct solid collateral reflect its natural price, and then that becomes the basis of the entire financial system going forward.
Mm-hmm.
And I think that would be honest, that would be correct. That's the right way to do it.
Mm-hmm.
And I hope and pray that's what is in the minds of Trump and Bessent and all these other guys. I mean, when he says there's another Bretton Woods coming and I want to be there, I hope that's what he's talking about. He talks about gold a lot. They talk about how the gold is in Fort Knox, and I think that might be. So on that story, what I heard from a guy who knew Johnson administration Treasury officials is we lent some of the Fort Knox gold to the London Gold Pool
Right.
between 63 and 68
Yes.
to try and help defend the currency fiat. And we didn't get it back, and Johnson was pissed. So the gold, there is gold in Fort Knox. It's not empty for sure. There's definitely gold there. The question is all the gold there? And this person that I know who knew these Johnson, he's an old guy, but he knew Johnson administration officials who told him that, said, it was diminished. And that would fit with Sheckman's thought that a lot of the demand in the earlier part of this year was Bessent coming in and saying, we got to fill up the part that got lost. And so the U.S. was a large sovereign buyer of gold, and we did some refilling of Fort Knox. It would make sense to me, right?
It would. It's funny. So interestingly enough, I wrote about this for this very conundrum for the newsletter, that period, which is very murky, by the way, trying to
Right.
find the actual numbers of year by year American gold holdings from 1946 to 1971 is actually quite difficult, by the way. It's in like four different places now. The Fed stopped publishing that data.
Yeah.
Like so I had to go
Peak was
find
like
it.
20,000 tons, as I remember, right after
It
World
was
War
over.
II, right?
It was all over the place, but I finally found a World Gold Council spreadsheet, that a report that
It
had it,
had it.
and I
Interesting.
grepped it and I put it on a hard drive. Right, made a
Yeah,
PDF
right.
out of it, pulled it and put it on a hard drive, and yeah, we were at 20 to 23,000, and then and then it was just a steady drain from the minute we went to Korea down,
To
and so we
8,300,
were.
yeah.
So what happened was we lost gold, went out into the Eurodollar system to build the Eurodollar system. We
Mm.
spent gold, we put dollars out, we expanded the treasury market, and then Europe just bought gold, and they just moved it from one to the other, and it wound up, on other people's balance sheets. And that's when, see, this is one of the things when I start to think of it this way, and I start to look at, okay, well, maybe we aren't. This is why I'm more conspiratorially minded than others. I know you and I had a brief chat about this before we started recording. I said, well, who's benefits from that? Because it certainly isn't the United States. It certainly isn't us. And what I've been doing is saying, well, maybe Nixon closed the gold window in 71, not just to untether us from fiat, but or untether us from gold and then give us fiat, but actually to defend what was left, because the
Oh,
Eurodollar system was
I don't think there's any
absolutely
doubt. I mean, I think they,
trying to take all of our gold from us. And
oh,
I'm talking about the
I don't
Bank
think
of
there's any
England and
doubt.
everybody else.
Yeah, that somebody was smart enough to realize that, holy shit, we can't let this go. Now, what he should have done, in my view, though, breaking and going to 100% fiat was a bad move. What he should have done was he should have revalued, because if he let it float and revalued, he'd have been in a situation where it wouldn't have kept going out the door. It was going out the door because in a dollar terms price, everybody knew it was worth a lot more than the $35 reference price, even though it was trading at 50 to 100, with the reference price being 35.
Right.
Yeah, and so, but your point's a very good one, and yeah, I mean, this is, look, what a very honest Federal Reserve chairman and a very honest Treasury Secretary would do is say, guys, we've run ourselves into a monetary dead end, and
Hmm.
it's all because we went onto this fiat system. We need to do a one-time reset, and this is, Judy Shelton, Luke Gromen, others have talked about this. We need to do a one-time monetary reset, wherein we stand ready to buy and sell gold at the following price. And if you have a gold coin, you can bring it here, and we'll give you $40,000 for it.
Hmm.
And in turn, if you've got $40,000 and want a gold coin, give us the 40,000, we'll give you the coin.
Right.
And and this is how it's going to be on a go forward basis. And look, I mean, there are things that the administration is doing that I support. I mean, I support the tariffs. I support the Hamiltonian view
Hmm.
of the world, that we should be looking out for America first, and so forth. I'm not particularly opposed to the tariffs per se. The thing I have a problem with both Bissett, Warsh, administration, all of this, is that I just think there's a lot of fantasy thinking going on. I mean, I think that there's a lot of belief that, oh, this is going to be really simple to get from
No.
where we are to what you and I, okay, so there's a Valhalla that you and I just described, right? Which is,
Right.
we're back on a gold standard. The money is sound. They can't print it. I mean, to me, that's really, I mean, the book I wrote was all about how America has decayed so much by going off of sound money.
Of course.
The loss of sound money really has caused a lot of damage to this country, period.
Great.
I mean, I'm sure you would
In
agree.
every way. In every
In
way.
every way. And so the way to get that back, the way to get back to the 70s, which is when I was growing up and you were growing up, and there was a middle class and things seemed fair and there wasn't all this political division. I mean, it was just, and there were problems, don't get me wrong, the Vietnam War was a real big issue, but it was I mean, in my view, I yearn for the country that I grew up in the 70s, and so forth. It just was a nicer place than it is today. I mean, I would know that my kids were going to be able to get jobs and buy houses, as an example. And
Right.
my kids have jobs, but they can't buy houses. I can assure you of that. Not
Right.
not based on housing prices and what they're making. So, um, I would yearn for the days where one breadwinner could support a whole family, right? I mean,
Agreed.
that's et cetera. So that's where we want to get to. The problem and the question and the issue is, how do we get from here to there? What does the road
Hmm.
look like? What's the proper path to go down? And I think, as conspiratorial as you are, I'm probably even more so. I mean, I have zero trust of all of these people. And
Hmm.
I'm just not sure they're smart enough and know how to get through it. And by the way, I'm not sure because of the pain involved in that transition, Tom, it's my belief that, it's probably going to take a pretty big crisis and we'll only get to the right solution because every other solution will seem worse. Do you know what I mean? And by
Right.
big crisis, I mean fiat currency collapse or really super
Or,
high inflation,
or something along those lines. And so this is the thing that I've thought about, and I've been catastrophically oriented.
Right.
I spent a lot of my life in doing the catastrophic. Okay, so what happens if the sun burps? What happens if this happens? What happens if that happens? I got all those things in my head, dude. It's not, I told you this before we got started. I raised goats for 12 years and
Right.
ran a small dairy badly, I might add. But I at least have done it, like I don't know. I need to know how to have these skills. We used to measure our new friends that we would meet, and we'd look at them and go, okay, do they have post-revolutionary skills? Oh, you're a doctor? Cool. You can be a part of the club. It used to
Yeah, right.
literally be, I used to, you're great. Like, talk to them for about an hour. Like, you can be a part of the club now, by the way. And they're like,
Yeah.
what? I'm like, trust me. And everybody else around the table will just kind of laugh, and then we keep going.
Yeah.
It was funny. But as I've gotten older, and again, don't get me wrong, like all those things are on the table. And when I talk about these things the way I did earlier, I'm talking about there's your path. That path is going to be hard to walk because everybody and their brother is making money off of the existing status quo, which
Right.
is raping the US taxpayer for every dollar they can get out of us.
Yep.
And we have to stand up and say no, and we have to find allies in that process. What's interesting
Absolutely.
is this is why, for me, the geopolitics is so interesting and has been, is because what I'm watching is the breakdown of the old relationships that you and I grew up with.
Right.
Okay. And that what I think I identified, remember, if you talk to 2021 Tom, you will hear something very similar to 2026 Larry. No offense. I
Yeah.
understood that world. And then, as I said previously, and then SOFR, well, actually, it wasn't even SOFR. And then Powell raised the reverse repo payout rate 5 basis points above the Fed funds rate, and the whole world lost their minds. And
Yeah.
I went, and after years of listening to all the different voices, the Martin Armstrongs, the Jim Sinclairs, all of these people, and everybody out across the entire spectrum, I went, are you kidding me? And it just kind of hit me like, kind of like Act 7 of an episode of House, right? Oh,
Right.
I know what's wrong with you. And it just hit me and it kind of hit. And I went, what if this is what's going on? What if we're about to see the big tightening cycle from
Okay.
uh, from uh, Powell, and then 6 months later, when we moved to SOFR, I got a couple of texts from some guys that are really sharp guys, and they're like, "Oh, by the way, the SOFR transition is a big deal. It's a bigger deal, and I'm not sure what it means yet, but I think it means this." And I went,
Okay.
and then we sat and we just kept testing that thesis behind the scenes the entire time. And then we watched Powell operate. And then we sort of, and you just start slotting the data in the events as they come up. And then when the Bank of Japan started to get off yield curve control, and they were doing it slowly, and they were,
Right.
Kuroda then gave way to Ueda, and his lieutenant didn't take over. There was all these little things. Maybe this is correct. Let's keep watching it. And so here we are in 2026. And let me put it this way: if Howard Lutnick was Treasury Secretary right now,
Mm.
I'd be building that pond to the back of my 7 acres up in Tennessee. I don't think Lutnick's smart enough, or experienced enough, or the right guy. As a matter of fact, I think Lutnick is actually a snake in a potential garden. If you argue that, and again, I have one basic heuristic in geopolitics:
Mm.
the guys everybody hates are probably on your side. So that everybody
Okay.
hates Trump, everybody hates Putin, therefore they must be the good guy. Or they must be, at least relatively speaking, a good guy. Because everybody
Interesting.
else is what I like to call the technocratic pedophilic elite.
Yeah. Okay.
Okay.
Fair enough. Yeah.
So, TPE, and then we have another version of it, which is TFE, these fucking people.
Yeah.
And so when you watch it from that perspective and you just watch the way they react to what Trump and company does, you're like, huh, they don't like this at all.
Right.
And then when you start mapping like who's an MI6 house organ, who's a who's a CIA house organ, who's a this, who's a that. You start mapping the media space, and then you start mapping all the other. And you're like, oh, it just starts to make the world becomes really complicated, but it really does break down into kind of like two or three basic camps, right?
I don't
So
doubt that. I mean, so map out for me. I mean, do you think? I mean, you say you see these incremental steps in the right direction towards,
right.
going back to this Valhalla that we would like to get to of sound money. I mean, do you actually really believe that behind it all that is the plan and that those steps are being taken in that direction? Because I feel like it's a little more chaotic. I'm not convinced that they're that smart or that's what they're doing. I could be
I
wrong.
know. I mean, again, I think that it's a process that's going to take a generation. Like it
Yeah,
took 100 years to build this mess. There's
right.
a massively ugly political fight happening on Capitol Hill, right? There's
Got
a
it.
massively ugly political fight happening in the Strait of Hormuz and
Right.
in London and in Brussels and in Beijing and in Moscow and in Singapore.
Right.
Like, so the world is changing. I know you mentioned that you're friends with Matt Dines. The way Matt has described it to me one day was, I think it was like, they like the Eurodollar system. They
Oh,
want
I
to
know.
move to the stable coin system, and they're
Yeah.
fighting the stable coin system, which is a lower leveraged system if it's backed, even if it's backed by a shitty thing like a US Treasury or a US
Right.
T-bill. But at least it's a one-to-one backing of this crappy instrument, right?
Right.
Um, and that's a good transitional phase to the next thing. And the
Right.
question then we have to, this is I honestly think this is our mission as the people in this age cohort between 50 and 60. Or I don't presume to know how old you are. I'm 58.
I'm
um
69. Yeah.
okay, okay, but in especially in my age cohort, right, which is that we're the guys who have been cockblocked from having power because they knew damn well that when we got into power we would take all that, we would not extend spiritual boomerism into the next generational cycle. We would break it and restart it. And so
Right.
you watch them really clamp down and try to hand power from the baby boomers and the silent generation to the millennials and skip Gen X. And Gen X
Right.
understands fundamentally that this needs to change, and
Oh,
we need to keep
absolutely.
to the
Yeah.
Zoomers. And
Gen
if we
X is
can do
pissed
that,
and right. Gen X is pissed and rightly so. I mean,
absolutely. Yeah.
yeah, big time.
So what I'm getting at here is that it's an intergenerational fight as much as it is anything else.
Yep.
It's a philosophical fight as it is much as anything else. And the big one for me, from a philosophical perspective, you start to like map the incentives of the people. It's like I just think it's the old colonial kings of Europe who believe that the world are that everybody's a bunch of serfs versus we the people of a constitutional republic who go, you know what, who gave them the finger 250 years ago,
Yeah.
and we need to
I
fight it.
don't I don't disagree. I don't
And
disagree
we're
that
we're
that
allies in
fight's
that fight.
yeah, I don't disagree that that fight is still going on and still in place. I mean, I
Hmm.
very much so. And the fiat currency world allows them to exploit us, and they've exploited us massively. I mean, it's interesting if you take that as the model and you look at China
Hmm.
and you realize that China is, in my opinion, very aggressively moving to try to have gold supplant, fiat as, the base level of collateral in the world. One could actually make a pretty strong argument that China's on our side of we the people. Do you know what I
I
mean?
agree. I've
Yeah,
I've been saying for like a year and a half ago. One day I was on a podcast with Alex Craner, and we were chatting about
yeah,
geopolitics. And Alex said, if you move the globe, and you reorient it away from the Europe and the Middle East somewhere else. I'm like, you look at the Pacific. I'm like, ARC, America, Russia, China. You can see the three big powers that don't need Europe. They all ring the Pacific Ocean. It's staring you in the face, and they're all
yeah,
run by sovereigntists, by the way.
yeah.
Donald
Right.
Trump, Vladimir Putin, and Xi Jinping.
Yeah.
And
Ah, that's an interesting comparison. Yeah. So, with respect to the monetary system, though, it's going to be fascinating to
mm,
see, how this plays out and what moves they make. I mean, and I don't know how you feel about kind of the day-to-day market stuff. I know you watch a lot of the spreads and so forth and all the currencies and so on and so forth. But
right.
I mean, I was on a pod yesterday. I was talking to somebody about it. I'm getting these 2007, 2008 vibes with this
Mm,
Japan thing. I mean, this is a big deal, and
yeah.
that
I I agree. Um,
yeah,
I, I've been thinking about it carefully, I identified that at some point they were going to attack the end carry trade or the
Right.
reverse carry trade.
Right.
I expected that the minute I saw Kuroda start to move them off the yield curve control,
Yeah.
and 40 years ago. So I've been kind of mapping it and waiting for that moment where they were going to take the big shot at it. Now, let's talk about the midterms. Let's talk about where we are, with Iran, the midterms, this,
Oh
that, everything
God.
else. I'm like,
Yeah.
why wouldn't you, if you were the bad guys, why wouldn't you pressure the Japanese yen and get everybody on the short side of the trade? Why wouldn't you? Since you remember, everybody talks about Japan having officially the most treasuries on their balance sheet, but the Bank of England makes the Japanese look like, I don't know, Saudi Arabia. When you map all of the Bank of England subsidiaries along with the
Yeah,
Bank
no,
of
I
England
listened to
itself,
you yesterday with Andy, and you were talking about this. I didn't realize when you add everything up, when you take all the stuff in the Caribbean and et cetera, it's as big a number, right?
yeah, it's an enormous
Go
number.
through
And
those numbers again because I thought they were really interesting.
sure, I'd be happy to. So the Bank of England is somewhere around $900 billion or plus or minus. This is,
Right.
you know, I'm doing it from memory. I could pull the tick report
Yeah,
up on
yeah,
my
yeah.
other
Round
monitor and do it,
numbers.
but
Round numbers.
yeah, so around 900 to $950 billion to the Bank of England itself. 350 to 400 billion depending on the month with the Bank of Canada, because Mark Carney is literally playing
Right.
some ugly game every month. He's moving 50, $60 billion around.
Yeah.
The Ireland, $400 billion. Belgium, which is where Euroclear is, somewhere around $350 billion. Luxembourg, $430 billion. The Caymans, $400 billion. BVI, British Virgin Islands, nearly $100 billion. Bahamas or Bahamas is something like 85 billion. Singapore, you could argue, is a British outpost, $285 billion. Hong Kong, another British outpost, you could argue $275 billion. You could argue these things. I don't actually put those in that category anymore, but I know
Right.
that there's a lot of British influence in the cross-border
Well, and
trading.
some of the Cayman Island stuff might be U.S. hedge funds or
Well, of course,
international hedge
of
funds with
course,
a carry trade, but still,
of course.
yeah. The point is that there's billions and billions of dollars of treasuries held by the guys that you would submit are on the other side of this, on the other side of our sovereignty and where you see the U.S. go. I agree with that.
Agreed. And the other thing I noted, what I did with the tick report is I started breaking it down by region. I don't know if you've heard me do this pattern before, but
No.
so and one of the things to try and prove that I I was right that everybody was against Powell's self tightening is I went back to the tick report to September 2021 going forward. So he started tightening in June
Yeah.
of 2021, and
Yep.
then. And so what I did was I just kind of binned the world up in three basic regions: Europe and their subsidiaries, the rest of the world, and Asia Pacific. And so all the Asia Pacific, so that's China, all the ones I just talked about, including Australia. So everything in China's kind of trade orbit in one area, the rest of the world, and then Europe. And what you saw was in the early stages of it, the Japanese and the Chinese were selling early, and
Yep.
Europe was buying, and the Europeans have kept buying. And it's net over 4 years now, 5 years now, they bought like 1.7 trillion net in the Eurozone to defend the
Wow.
euro,
Wow.
to keep the euro from collapsing.
Collapsing. Yeah.
Yes.
Yeah.
So, in the Bank of England has more than doubled its amount of treasuries. It went from like 350 billion to $900 billion, something like that. It's
Yeah. No,
crazy.
I
And
saw
then, and
that.
then there's all the subsidiaries. So it's even more than that.
I saw
So,
that.
and once Powell made it explicit that he was um, raising rates, and he started raising rates hard, the first thing Christine Lagarde did was put the TPI in place to do yield curve control internally
Right.
and shuffle deck chairs on the European Titanic.
So I mean, just help me to understand
Sure.
your views though. So game theory this out on where this goes. I mean,
Mm.
do you share my view that Warsh will not raise rates and will actually ultimately cut them in order to try to, throw out the Phillips curve and,
Yeah.
be supply
Yes.
side in terms of all that? Okay.
I
So
agree
you do
completely with that.
no.
Oh, I was going to say is that I think that what was running up until this meeting was that they wanted to maintain the spreads, the carry spreads between
Right.
German debt, Japanese debt, and everything else.
Got it.
And since the ECB already raised a quarter point, they want to validate that model by forcing the Fed and the BOJ to raise a quarter point. at the
Right.
same
Okay.
time.
Got it.
Okay, that
Got it.
was yeah.
So Warsh, and so he's going to use the AI argument. He's going to use the task force redefining the CPE, all that stuff. Okay, great. So he's going to cut rates. I get it, to try and, run, quote unquote, run it hot. Okay.
Mhm.
Get it. And that's actually probably the best outcome for America. I mean, we need to
Agreed.
reshore, we need to grow industry.
Yep.
I mean, we need to be less financialized and more, it's more atoms, right? We need to make physical shit. And
I
so,
agree.
yeah,
Agreed.
we're all okay, so fine. But let me take it the next step with your thought process. If
Mhm.
that's the direction we're going, can you run it hot without having serious inflation? Because I don't think you can.
Not in the short term, no,
Yeah,
because you have such a capex dearth
right,
in oil and gas, critical minerals. I hate that phrase. The critical elements. All of it. Like we have a copper screaming that there's a supply problem in
right,
copper.
right.
Davos slash the BOE or slash London have done a lovely job of destroying all the big copper mines that everybody wanted to build. First
Yeah,
Quantum, the Bob.
yep,
We've had a problem with
yeah. No,
Grasberg
I
out
know
in
this. There's an
any of
enormous
the
copper.
stories
There's
blown
an
over.
enormous
Right,
copper deposit in Arizona that they won't let people touch. It's unbelievable. I mean, Rio
right.
owns it.
Exactly, exactly.
Yeah. So,
So, but what that means is in the short run, this is why I have a problem with the Phillips curve, right? Because the Phillips curve is literally saying, let's strangle the growth baby in the crib because, oh my God, in the impulse, we're going to get a bunch of inflation because we underinvested in the real economy.
right.
And it's
No,
just pure supply and demand at that
we're
point.
we're
Like
on, we're
we're
on
offering,
we're totally on the same page. I'm with you
right.
there. But you can see that we would have short run inflation, maybe not long run, but short run inflation. Don't you worry, and this is where I go back to my big print thesis. Don't you
Mhm.
worry that inflation then breaks the bond market, and that the bond market breaking then leads to the Fed having to do what Warsh doesn't want to do but has to do,
Which
which is
is
to say stepping in, and doing more QE, and that becomes the next leg of, I mean, so let's just go back history wise. Currencies fail when everyone loses confidence in them, right?
right,
Currencies, I mean, a currency is just a confidence game, right? Everybody
of course.
trusts it, and so, and we've got 100 examples of it. You got Zimbabwe, Venezuela, Weimar, you name it. I lay these out in my book, and they all, the tipping point was always when enough of the people realize, a quantum of the people realize they can never stop printing money. Okay, and so, oh, this money's no good. Gresham's law. Give me money that is good. I want out of
Right.
this and into that. Okay, fine. Um, my sense is, so '08 was the first move in Gresham's law direction. 2020 was a bigger one. We run it hot, we get more inflation, the bond market says no mas.
Mhm.
Don't we get a third one? And with each of these waves, more and more people come to the conclusion they can never stop printing. That's
I
my
have a
view.
count. It's a perfectly valid thesis, as
Yeah.
long as you. And again, I'm not even disagreeing with it.
No,
It's
you
the.
can disagree.
Well,
I want to hear, if you
let me put it
disagree,
this way.
tell me,
No,
just
no,
explain it.
yeah, no. I want to make sure that I'm very clear on this. Okay, this is
Yeah.
important. That's a high probability outcome. Okay.
Okay.
Now another high probability outcome, or part of it. Go back to what I said earlier. Who's got the most vulnerable bond markets? Germany at a
Europe.
10-year or
Europe,
3%,
no doubt.
or exactly. So
Yeah.
what'll happen is the first wave of this is capital flight out of Europe. This is the Martin Armstrong argument's been going on he's been
Right.
going with for a long time. We've seen some of that because this I was just looking at something this morning. I was asked to comment on Twitter this morning about a thing that's going around about the amount of money that foreign companies are holding at foreign branches at the Fed, right? So
Oh,
foreign
interesting.
banks holding, yeah, the numbers are crazy. They've deposited a whole bunch of money. Well, the Japanese want that money back. They want that money repatriated. They've literally said, Sumitomo, Toyota, and whatnot, bring that money home, and we're going to make it worth your while because now Japanese 10 years are trading at nearly 3%, and Japanese 30 years are trading at almost 5%. Like
Yeah.
the Japanese are going through a massive bear steepener.
Right.
So what I would say is the following: we run it hot, but we're watching money being invested here at 5% versus everybody else on our long end, 4.5 to 5% on the long end of our yield curve. That's fine. I think what we wind up doing is actually telling people, look, you're going to be able to invest here at a lower cost of capital behind our paywall, our onshore offshore divide,
Hmm.
where you're going to be able to invest and build. You're going to take your money that's offshore, bring it in here, and we're going to do what the Chinese are currently doing, which is domestic lending is running at 1.5 to 2%, as Luke Croman has pointed out, and everybody else wants to borrow you on, they got to pay 4 or 5%. I think that's what we're going to do to Europe, and we're going to starve Europe out, or we're going to bring them to heel. We're going
Yeah.
to bring all the spending home. We're going to actually balance the budget. I was just chatting with some patrons this morning before he popped on the call. If you look at the rate at which they're uncovering Medicare fraud may be running as high as 90%.
Wow.
Now, if we're all like under the assumptions, like it's like our elections. Well, there's cheating, but they're like 1% or 2%. No, our elections are like 7 to 15% insecure, and they can print whatever ballots they want and produce whatever outcome they want based on the polls they've already previously published. So I think it's the same thing with the budget. I
Fair
think
enough.
if you start thinking about how much we don't realize just how much we're being raped by our
Fair enough. I mean, Nick Shirley would certainly show you that, there are plenty of places
right.
where this is just
Yeah,
ridiculous. I
yeah,
mean,
yeah, exactly. So
yeah.
all I'm saying is that I think that we're watching the globalist immune system
Hmm.
react violently to the Donald Trump style sovereigntist cancer.
Fair
And
enough.
we're in the phase of watching the maximal amount of response from that immune system
Yeah,
right here,
fair
right
enough.
now. And in 6 months, it's going to look completely different, depending on the outcome of the midterm elections.
Fair enough. Fair
Okay.
enough. Yeah, no, I mean, so you think we somehow kind of make it through it, without the massive damage and without so much inflation that the bond market breaks, and we come out the other side,
I'm with
whole.
Brent Johnson. I want Brent Johnson that what other alternative does anybody have?
Well, I agree with that. I mean, the dollar as a means of payment, there's no doubt that the dollar will be the leading currency for quite some time. I mean, I get that,
And we make a
but
and to your point, we make a move towards putting gold directly into the collateral stack.
well, that's the thing. So that's what I was going to come to next. Okay,
Hmm.
so yeah, the dollar is the medium of exchange, but the treasury debt isn't going to necessarily be the rock solid collateral that it once was. Gold is going to be that, right?
Sure, sure. I,
Yeah.
I I think we don't
And
have
and for that
have an
to
option.
occur, I mean, apart taking the geopolitics apart from it and all the sovereignty and all that sort of stuff, which I'm pretty much in line with you on, for that to occur, the gold market is way too small, right?
In terms
Right.
of notional value, it certainly is.
Exactly. And
Larry,
I mean, the
I
gold
firmly
price has
believe
got to be so much higher than it is now, right?
what I would say is I've been saying this for a while. If you want to do the math, and I don't usually like to talk targets because I don't
Right.
want to lead people on into something that
Right. Yeah. Yeah. You
and this is
said this, right?
but if you really want my honest opinion, I've been saying pretty not every once in a while. I think $20,000 gold, $400 to $500 an ounce silver, and $1 million Bitcoin is what we need to do anything close to what I described earlier.
I completely
Period.
agree with you. We're right. My numbers were almost identical. I mean, it's like, and so what that tells you is that all these people saying the debasement trade is dead
Mhm.
and Warsh is a hawk. Well, okay,
Well, Warsh can be a hawk at the Fed. He can hold the balance sheet at the Fed relatively stable from here as long as the collateral rises. What I've been saying for a long
fair
time is
point.
like, let's look at it. We got 8,133.5 tons of gold on the Fed's balance sheet, valued at $11.04 billion dollars.
They can rewrite.
That's a
They can write
40.
it up.
All
Yeah,
they have to do is write it up. And if you take gold to 20,000, now all of a sudden that's a $4 trillion pile of gold against a $6.7 trillion balance sheet. That's a less than 2 to 1 leverage ratio. Can we live with less than 2 to 1 leverage ratio on the central bank's balance sheet?
yeah. No, I get it. Yeah, no, I totally get it. And that's,
Especially while watching all the old
but that's a
toxic
that's a
mortgage-backed
big,
securities roll off the balance sheet. Then we
yeah,
get
that's
back
a
to 1 to 1.
big write up of the gold value. I mean, the world ain't expecting that. I can tell you that. I mean, because
Well,
I'm still dealing with investors that are terrified that last year was just a fluke.
That's interesting, right? Like, it's funny because I never think in those terms. I literally am like, okay, maybe we only get to 7 or 8,000. Maybe we only go to a 3-to-1 leverage
Right.
ratio on the Fed's balance sheet. What I would argue is that the market is going to make that decision.
Well, that's right. And none of
Yeah,
us know.
right.
None of us know, but it's pretty easy to see the trend. And yeah, the debasement is just it's kind of baked in the cake. And
Or
yeah,
or the debasement's already happened and the collateral hasn't been
well, I guess
allowed to
that's
be
right.
appreciated.
That's actually a great way of putting it. The
Right.
collateral hasn't caught up yet
Right. Collateral
to the
hasn't caught up
basement.
to the debasement. It was the way I was trying to describe it to Dave Collum and a couple of the podcasts we did together. I said, Dave, let's look at it this way. An entry level job in the United States is between 13 and 17 bucks an hour.
Right.
I mean, 13 bucks if you're bagging groceries, $17 an hour if you get like a data entry job. But my daughter's first job out of high school, she got a job at UF Health, labeling skin cancer samples for 17 bucks an hour. Came with
Mhm.
no time off, but came with health insurance, came with Florida retirement system. So that's a entry level job, making
Right.
30 grand a year. Now, her plus her husband, presumably, income times three in 3 to 5 years, they're making 35 to 40 grand a piece. He might be making more. Income times three, call it 100 grand in there. That's a $300,000 house, which, oh, by the way, is roughly what you can get a starter house for in a lot of secondary markets in America.
Yeah,
And
if
so
you're not
that's
in a big
so what I'm
expensive,
saying is the wage inflation has kind of already happened.
right?
So, and then we have a Schiller PDE that's inflation indexed at, all-time highs or nearly all-time highs, 42 or whatever. But if we're talking about earnings catching up you know, if earnings catch up faster, then, and as inflation rolls off and the Schiller PD is going to drop just as a matter of math because it's indexed to inflation. It's inflation
Mhm.
adjusted over those 10 years. And we keep inflation between 2 and 3% after a big 7% print. That's naturally going to come down into the 20s. That's still obnoxious. Don't get me wrong. I'm not a fan of the Schiller PDE being in the 20s as opposed to the teens or the single digits, which is where it should be. But that's a
Mhm.
generational problem. But
Right.
over the course of the next 5 years, I could see the Schiller PDE at a stock market that doesn't move,
Right.
coming down to 25 times earnings on normal, just on reversion to the mean, just on CPI mean reversion, right? So
Yeah.
it's all
I agree with that.
okay.
Yeah. So it's yeah, it's kind of a mess. And I guess I don't know. I think I think your view might be. I mean, so my view is that there's going to have to be some pain experience to get through this collateral revaluation piece. You know.
Didn't say that. I didn't. That was not a Goldilocks assessment of the
Okay. So
process. It's going to be ugly, but
yeah, okay.
that's the
That's what I wanted to
path
see because
through
I
it.
hear you describe
Yeah,
it
yeah,
like, yeah,
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 yeah.
we'll just mark up the collateral and everything will be okay.
No, we
And,
look at the collateral. Do you know how many governments go broke in that
right.
scenario?
That's my point. That's my point.
Of
It's
course,
gonna
of course. Yeah.
this process. I mean, I'm sure we're all familiar with the fourth turning model. I mean,
Mhm.
this is going to be ugly, and there are going to be winners and losers.
Mhm.
And if we reset to a sound money system on the other side, things are going to be much better.
I agree.
But that process of resetting, I mean, sadly, and I mean, this is why I wrote the book and I do the pods I do. I feel like I understand this monetary stuff pretty clearly. I don't really understand the geopolitics nearly to the degree you do, and I don't follow it as much. I
Sure.
kind of stick to my lane, which is this monetary stuff. And it's just so obvious to me
Mm.
that, the average American is just kind of cruising along, not thinking about this shit.
They
And
are.
that
They
that
are.
they're gonna be badly damaged if they don't save in sound money vehicles. Do you know what I
I,
mean?
Larry, I agree with you. Like, I mean, when it comes to that kind of thing, like, ask me where I put my money.
Yeah.
Like, there's two things I tell people all the time. One, I'm an incredibly good analyst of this stuff, but I'm a miserable trader because, well, I'm Italian
Oh
and I'm
yeah.
type A and I'm all over the friggin' place and I'm probably borderline bipolar. Therefore, I don't trade, right?
Right.
I just buy physical gold, buy physical silver, buy some Bitcoin, stick it in a vault and walk away from it because I can't really manage anything else. I could, but I've tried and all I ever do is lose money in the long run. So I'm better off not doing that, keeping the debt load low buying my
Right.
capital at
Well,
reasonable
and I
rates.
think, and by the way, I think for most Americans, that actually that's kind of the winning strategy. I mean, unless you've
You
made a
know,
business out of investing and trading and doing all this stuff, which very few people have, and very few are very successful at it.
yep,
This is not that hard. I mean, you dollar cost average into three assets that can't be printed, gold,
right.
silver, and Bitcoin, and recognizing by the way that sometimes they go down a lot. I mean, if you
Yeah,
bought silver at 120,
I'm sorry.
at 58, you're feeling like shit. Or if you bought Bitcoin at 124,
Right.
I mean, same number at 58,000, you're probably feeling like shit. But also recognizing that the math of the things we've described is kind of inexorable, and therefore you will be well served on a long enough time frame, right?
That's, yeah. So, and to invoke the zero hedge, right? The
Yeah, yeah, right. On a
I
long enough time frame, where
Yeah,
yeah,
yeah, exactly. Um, yeah, no, this is the thing, and keep your it's so that's what I tell people all the time, and I hope that you try to create alpha for people where you can. You try to do the reason I became the geopolitics thing is because I was obsessed with gold, and I'm like, well, there ain't no asset on the planet that's more geopolitically charged than gold. So in order
fair
to
enough.
understand, so I just gravitated naturally that way is to try and figure out what was happening, and then over the course of time, you're like, oh, that's why,
Yeah.
and then all these other things start to happen, and it was my lane, for lack of a better term. And this is why I get told I have to stay, which is staying at that intersection
Right. Of the
between
two.
of the
Yeah.
two and try to keep and be the bridge to explain the geopolitics and the markets and stay in the center.
So here's an interesting one that maybe we can close on that I think
Sure.
would be it's worth discussing.
Hmm.
So Bitcoin and gold, right?
Hmm.
Which wins longer term? And has China's clearly made a bet on gold? And I don't think, I mean, although they may be mining it at a state level, I kind of doubt it. Um, you know, is it possible that America, can leapfrog, the great industrial China by, migrating more rapidly to Bitcoin? And is that what part of the stablecoin, motion movement is all about? Do you know what I mean? And it's because,
Yes.
I'd be curious of your views on that.
I'm a fan. How I mean, I'm an OG in Bitcoin, right? If
Right,
I had actually you know held on to my Bitcoins, we wouldn't be having this conversation because I believe I own my own private island somewhere because
right.
so many it was not even funny. Um, but what I would say is that yeah, our embracing of digital assets in that respect, and Bitcoin being the collateral stack, the collateral at the bottom of that stack, is a very important part of this process for us.
Right.
Um, it's the thing that's going to allow for quote unquote the big print of the credit that's going to be needed to rebuild the manufacturing industrial base by issuing stable coins fully backed by these things, but at an ever increasing. So you're gonna buy stable coins from your local bank, you know, at 3.5% Treasury, the T-bill rates, but they're going to be backed by things that are going to be growing at faster than 3.5%. And
Right.
so, and then you're going to build a business off of that. And it's literally the virtuous cycle and the virtuous credit cycle for the bank in reverse, right?
Right.
I think that's what we're trying to do. And you're trying to actually reverse the gearing of the old Eurodollar British extraction system, Anglo-Dutch central bank model of debt and property taxation to the
Right.
government and reverse that. But in the process, we free marketeers are going to have to accept the fact that our national balance sheet is going to include assets similar to what the Chinese have done, what the Saudis do, what the Russians do, which they have a sovereign wealth fund.
Right.
They have a stake in the important. We're moving into that. That's what Trump's stake in Intel is about. That's what Trump's stake in Fusion.
MP. Yeah.
That we're gonna do some of this, and that's part of Hamilton.
Yeah. No, I
Part,
get it. I get
you
all of that. Do
and
you do you think much about the one versus the other? I mean, my view, and this is a longer term, this is decades, okay? This isn't tomorrow.
yeah,
But
yeah,
my view is that ultimately, I think we both view Bitcoin as digital gold, right?
in a
It's a
way, yeah,
scarce digital asset.
right.
We know it's even harder money than gold. My view is
Agreed.
ultimately my grandkids will be pricing things in Satoshis. I mean, maybe in dollars, maybe Satoshis, but I think Satoshis will be a factor.
I agree.
And I think ultimately the Bitcoin, and this is why I believe there's more upside in Bitcoin than gold.
Mhm.
Ultimately the Bitcoin market will, grow to be the size of or larger than the gold marketplace. I mean, do
Agreed.
you share my views on those? I'm just curious.
I mean, in my heart of hearts, if you just want my instinctual opinion on this,
Yep.
yes. In my professional detached attitude of buy both,
Geopolitically, it might be hard, right?
buy both, and buy
Yeah.
both, be agnostic, and then also remember, I also tell the Bitcoin guys all the time, the Bitcoin maxis hate me, by the way, because I'm like, I don't believe that there's the end of any technology. So I don't know that Bitcoin is the end of the digital
Fair
money
enough.
revolution.
Fair enough.
Therefore, I don't like to think in terms of decades, I like to think in terms of process.
Yep.
And I
Fair enough.
watch eras rise and fall.
Fair enough.
That's it. And
Well, yeah, and
it's
I've always had the view that, and I have Bitcoiners spit at me for liking gold, and I have gold guys spit at me for liking Bitcoin, and I've always had the view, and actually, I'll tell the world right now. I mean, my personal allocation is about half and half. I mean, I've got about half my wealth in Bitcoin. I've got about half my wealth in my gold fund and gold stock mining fund, and now that'll change if there was a time when the Bitcoin was larger than the other because gold was down and Bitcoin was up. And it obviously fluctuates based on the value of the two relative areas,
of course.
but I'm with you, and the politics does play a role in all of that. I mean, it's certainly, gold is very well understood by all governments all the way around the world, and Bitcoin, we're still in the early days. So
Yeah,
I
no,
would
I
agree with
think
you.
that's a fair way of looking at it. And I don't give people capital allocation. I have more gold and silver than I do Bitcoin on my balance sheet, as modest as it is, simply because, I started buying gold in 2002 and silver
Right.
in 2002.
Yeah.
I mean,
Yeah. No,
and I bought
so
it all at like $200 an ounce and $4 an ounce silver.
yeah, no, it
Like,
was great stuff. Yeah, no, I had silver. I bought it $6. I mean, it was kind of
right.
wild. Never thought it'd be 100. Never thought it'd be 120. I was kind of like, whoa, this is interesting.
This
And
is
and the thing
fun.
that's amazing is I really just think we're getting started. I mean, I don't know how much if you subscribe to or listen to Michael Oliver, but I think he's really good technically. And I mean, he's projecting 3 to 500 on silver. And I don't think he's wrong. I mean, not tomorrow, but I think,
Yeah, no, my technical I don't do traditional technical analysis. I mostly just read candlesticks. It's a variation on like a Niederhofer opening range theory thing with as little chart analysis, as little chart art as possible. I'm just, when I look at numbers, I'm like, I look at the chart, the longer term chart patterns. It's pretty clear that the numbers for all three of these assets is much, much higher in the long.
exactly. That's exactly
And
right.
my only caveat about Bitcoin, to just to remind everybody, is that Bitcoin made its greatest gains when the government and the Federal Reserve were doing everything imaginable to vandalize the dollar.
Mhm.
And what you should do, and always review in your mind as your thesis, what happens to Bitcoin's potential valuation if the government decide and the Fed decide to defend and take care of and nurture the dollar, relatively speaking, to what you're used to. One of the We all do this, right? As we get older, we have all this experience. And what I would say is don't bring a 2015 mindset into 2026. When I met Andy Schechtman in Atlanta a couple months ago and I was listening to him talk, and I listened to his talk, and I was like, Andy, you're doing a great job. I told him this literally like 5 minutes later. I walked up to him later, introduced myself, we chatted, and then we spent the evening chatting, over drinks for the rest of the evening. And I said, Andy, you did a wonderful job of describing 2015. I just don't think we're there anymore.
Right.
And now let's talk about 2025 or 2026, and let's talk about this world. And that's a different world. And
No,
we
no
need to
question.
keep
No
at it. We need to
question.
keep, constantly being able to incorporate that as we move
Yeah.
forward.
No,
Even if
no
you only do it
question.
even if you review it only 5 years, like if you
All,
only go
all
on
the,
with Gluck.
yeah. Well,
So
we're seeing more. We're seeing a lot of things change very rapidly.
yeah. Yeah, I mean, it's funny, Larry, you say that, right? And I was chatting with Dexter White the other day, and we said, we used to sit here and go, yeah, I mean, we could make a call today, and it will play out 4, 6, 7 months from now. And then we're like, I got 10 days before everybody else figures it out. Like
Yeah.
the pace at which people are
Yeah.
beginning to figure out what's going on around them is accelerating, which is both good and bad for all of us.
Correct. Yeah.
It means that analysts like ourselves have to be ever more in the present and in the moment,
Yeah.
but at the same time, we also have to be less dramatic about it as well. And I mean, I can be as dramatic as any guy. So I make intuitive calls and go out into the la la land, and sometimes they hit and sometimes they don't, like, but
Well,
the goal is to,
it's all probability weighted. I mean, in the summer of '07 or '08, some people saw it and some people didn't, and none of us were certain, but it happened. And this financial system is a little bit of a Rube Goldberg machine. Do you know what I mean?
it is absolutely, absolutely. And you're watching everybody try to like figure out how they can continue to control their portion of the Rube Goldberg machine.
Yeah, and it's not as if sometimes extreme things don't happen, and I'm not suggesting they're going to happen or they're imminent, but I do know that there's some stresses and strains in the system, and we're seeing that in Japan right now. That's to me that Japan is a big deal right now. I'm sure you
It
agree.
is.
It's just a
It
really
is.
big deal.
It is a
Yeah.
big deal. I think that we're gonna find out, whose financial capacity or reigns
Right.
supreme.
Yeah.
I
No.
like to
Well,
kind of use the old
it
Iron
will.
Chef thing: whose cuisine reigns supreme, whose financial
Yes.
capacity get this right
Yeah. I mean,
reigns
it's
supreme.
the next 3 months are going to be very, very interesting because we're going to see a lot of cards on that whole front. So
Absolutely,
I'm looking
absolutely.
forward to that. But
Um, we have anything else we want to talk about? I think this is a
not
good place to
really.
end.
I mean, not really.
Okay.
The only thing I would say on the Bitcoin side, I just tell everybody this. It's a very volatile asset. I recommend it. I own a lot of it. I believe it. I've always dollar cost averaged it. You've got to always be prepared for it to go down 50%. I don't think it's at the low end of the power law model right now, so I
Mhm.
don't think it's likely. But the only time I've seen people get hurt in Bitcoin is when they buy it at a peak or they buy it aggressively and they maybe buy too much and it goes down and they panic.
Yeah.
I think that the trade I'm talking about, and I'm like you, I'm not a very good trader. The trade I'm talking about is really what I should say. The investment I'm talking about is a long-term bet that I think is quite likely, which is that we need to reprice, the sovereign currencies in terms of sound assets,
Yes.
and that as that continue, that's in the process of occurring. It got
Mhm.
really kicked off last year when gold went up 65% and silver went up 4x.
Mhm.
And as that process continues, you'll be well served to be in these assets, but you can't look at a month or 3 months or 6 months or even a year. You got to give it. I look in kind of 3 to 5 year time frames, and I'm very comfortable with my positions when I take that time frame. And I would just, to anyone who's listened to this and thought, oh, I got to go buy a bunch of gold or silver or Bitcoin, just understand that issue, right? Understand that downside issue. So,
I never even look, for example, I never even look at the daily charts. You match your time horizon with the chart, or the analysis that you're doing has to match the time horizon of the investment that you're making.
right.
So, I check in with my patrons twice a week. So we look at weekly charts. Every month, we look at monthly charts. Every quarter, we look at the quarterly chart. Every year, we put up the annual charts. And then we move on to the next and then those will always tell you a slightly different picture,
Right.
right? The weekly chart will be bearish and the monthly chart may still be bullish. And then that tells you something different. And by breaking it down like that way for the average person who's trying to go and run their life, they don't have time for that. They just
Yeah,
need to know from you what's the actionable line item here, and give them
exactly.
that, and then they can make a good call in this time frame, which is what am I going to do this month?
Yeah.
I think $4,000 gold looks pretty good on our way out the door. Let everybody know where they can find you, what
Oh yeah,
they
thank you.
all
So,
about.
just two things. I'm always, what my dad said, always be selling, right?
Yes.
So, if you want more about this, I wrote a book. It's on
Right.
Amazon. It's called The Big Print. That gives you my point of view. And my website is ema2.com. There's a newsletter on there for free. You can sign up for it. You can download the last 5 years. And in that newsletter, there's 20 pages a shot. It's kind of like Tom's work. It's similar, just an analysis of here's where we are, here's where I think we're going. In terms of my partner and I write it, David Foley and I write it, and it's a lot about the sound money trade, which is kind of what we're all about. And what I think we're kind of in a sweet spot for the sound money trade, Tom. I think the next few years are going to be pretty good to people who own sound money. After that, it'll get fuzzier, but
Yeah.
we're still everyone who thinks it's all over because gold and silver corrected. No, I think we're just getting started, is my view, right?
I, I would say I would agree with you and say that we have one or two more big legs to
Yep.
finish this off over the course of what was hopefully not the rest of my life. And
Oh gosh,
go from there. So,
no, I think this is going to get solved in the next 5 years, in my view.
okay. All right.
I mean,
Cool.
if you look at the math and the way that it all maths out, I think it's got to get solved that quickly. I could be wrong, but that's how I feel about it.
Okay. I can live
So,
with that. That's a very
yeah,
fair assessment. That lines up with Martin Armstrong's 2032. It lines up with a lot of things.
a
So,
lot of
with
things.
that
Yeah,
said,
exactly.
Larry Lepard, this has been a blast. I've really enjoyed it, and I hope
Yeah,
you did.
likewise, Tom. Really good to meet you. Enjoyed the conversation. Happy to do it anytime. And as I say, I respect your work and what you're doing. And you bring a view of some things that I don't think as much about to me, which I find very interesting, and I appreciate that.
Good. That's all I can hope for. So, with that said, you are on Twitter. Your handle
I'm
is?
on Twitter. Yep, make a lot of noise. It's mostly anti-central bank.
I know. But give people your handle,
Oh yeah,
please.
no, it's just my name, Lawrence Lepard, at
Okay.
Lawrence Lepard on Twitter. Yeah.
Excellent. I'm TFL 1728. We're Patreon/Gold Goats and Guns. That's how we make our vig, and we'll do the thing. So you guys be well. You take care. We'll talk soon. Keep your stick on the ice.